Uh. Good morning. Let's see what price has in store for us today. So, just getting to the chart right now and see what we have for today. For those who wasn't in the stream yesterday, we had to where we had that big push up. It was an issue with it uploading yesterday, so I'm trying to upload it again. Kept saying that it wouldn't go through, so I'm trying to upload it again so you guys can watch it. Because I upload all the streams, but I want to show you guys also too, really quick. Let's see. I want to show you guys the picture of the aftermath. This one. Give me 1 second. Let me find it. Where is she at? Here we go. All right. This one yesterday. We had price push up super strong. And then you feel like you missed this. And this was the consolidation we had marked up. And we watched it come all the way back down. And we ended the stream. It was just pushing off for this 5-minute inversion and confirmation. And then it finally took off. But look how many times it wicked down super hard, but it didn't want to break it. That's why I always tell you guys, you want to have patience in the trading. Patience don't get you a long way, because look how the 1 hour is straight up and then it comes right back down. But then you're expecting it to go lower, but you have this consolidation right here. That's a higher time frame consolidation. So it's acting as a barrier. So if I want to see price really go down, if it really wants to go down, I need to see it break things like that. Not just imbalances. That's why imbalances, they're good to know, but if you're only using those to bounce off of and buy and sell, then you're gonna be lost. You need things in confluence to get you where you're trying to go. So when you're seeing pushes like this or drops like this, none of this entices you to chase it. You just wait for it to settle out, like I was talking about yesterday, and then it takes off. So I'll get that uploaded so you guys can watch how we seen it go up and then seen it come back down. But let's go ahead and get into today. So with today, like I tell you guys, I always start off with a clean chart. It's not that I don't use the stuff from yesterday or prior, but whenever a price takes off and I'm looking at, what transpired, I want to see if I can get that same concept after the fact, going into the new day. That's very, very important. Wait, first of all, don't tell me y'all guys can't see it. Hold on. Bruh. Go chat. Oh, no. I just looked up and seen the black screen. Can you see it now? Can you see me now? Just put a thumbs up if you can see me now. Okay, cool. That's crazy. Okay, that'll get that situated. All right, appreciate that. All right. Ah, okay. Well, real fast before we take off with today. So what I was just explaining was this chart right here, and when we had that big push up, and we seen that big push up, and I was saying don't chase it, so I already took it off, and then we had that consolidation here in the 5 minute, and then price consolidated, and then we dropped off to the downside. And even this candle right here, you see how this candle went back into that consolidation, and then we just dropped off real hard. You're not chasing either one of these. You're waiting for price to settle out somewhere where it's more convenient for you. So in this case, we were looking at that hourly consolidation, and that's what it came back to it. And you guys are hearing me talk about how we waited for it to come back to it, and then once it happened, it played around inside of there, but it finally gave up the ghost and took off. So things like this, you don't want to jump on things like this because it's running. If it's running, it's running, and if it's not your day, it's not your day. You got to be okay with that. And if you had enough patience, this will be your opportunity right here. And that's riding off for the rest of the day. So, okay, for that, man, I couldn't believe that didn't work. Okay, so let's go ahead and get into it. So, 4 hour, get that first. Let's look at the daily first. Okay, daily is clearly bullish right now. Just you got this high here, well, these two equal highs here. That price can go for today. That's a possibility because it's bullish. Plain and simple. No overcomplicated. Nothing of that. No reason. And then basically this high was already swept, but now we're headed back towards it. So simple, right? No need to overcomplicate it. So, but like I said, I don't like having stuff like this on my chart. Like it's an obvious high that I can see price going to. Once I mark up that one time and I see it, I don't want it on my chart because I don't want to interfere with what I'm seeing. So either I'll take it off completely or I just mark it up. But I don't like a lot of stuff on my chart because it just throws me off. It actually doesn't help with you getting in sync because you want to get to the point where you can see with your eyes with nothing on there. That's what you want. That's the goal. Okay, so daily high here, and this is my first time getting to the chart, so this is fresh. I haven't looked at it yet. So daily high here. So now we got that's obvious. Go 4 hour. Because all we're trying to do now is just get in sync with price before it opens. And then after it opens, we'll go from there. So right here, we have this push up, push down, consolidation, push down, push up, push down, push up expansion, and then we came back to what? Well, we came back to this consolidation here off of this candle. And then with that candle, you can look at the midpoint of that candle since it's inside of this consolidation, and then that's 22,951.75. So that's just showing me that price has been held up. It hasn't came back down to it. And then from here, after we pushed up, what do you have right here? More consolidation here. So you can look at this 4 hour. That's consolidation to the upside. So let's go ahead and mark that up. 4 hour. And this is not saying whenever you're finding a consolidation, this is not saying, oh, price should bounce off of here and continue on. You're simply using it as confluence. That's what you're using for. What you trade is the model. That's what you're looking for. What you're searching for in the moment is confluence. So I see prices bouncing off of that. Now, if I can go to the 1 hour and redefine that consolidation, I would do that. What I mean by that is if I have a 4 hour and a 1 hour consolidation that's lined up together, I'll use the 1 hour instead. Because it's a lower time frame and it'll have a lot faster reaction to things. So in this case, I will look at it from this perspective here. Pretty much I would say here, because you had this push up, this candle stop, and then if you look at the high and low of this candle, price has stayed inside of it for the most part. And this is the body high, and it's still inside of this same candle. Like if I put a box on side of here, it's still inside of it. So I'll just use that as consolidation. So that'll be that. So instead of 1 hour, 4 hours, this will be 1 hour. And just looking at it right now, we see we're going towards the high right now. And excuse me, price came off this. You could mark up this imbalance, but you can clearly see it. I'll just mark it up so you guys can see it. So you have that. That can be in our way at some point in time if it wants to come back down. Okay. Okay, 1 minute till open. Let it open, let it do its thing, whatever it needs to do. Even if there's an opportunity there right now, I don't want to take it. I'm waiting for the market to open, let it do its thing. Here. I would say at least once you get experience with it, the market open and dealing with it, I would say at least 5 minutes before. But after that, I'm sorry, 15 minutes before, if you're not experienced yet. Once you get good with it, 5 minutes after. You just want to let that time pass where that initial phase of volume comes in and can persuade you to go one or the other way. So now we got this set up. Let's go 5 minutes. Let's watch price action. All I'm trying to do right now is simply get in sync with price action. That's it. Nothing more, nothing less. Like right now, just having the consolidation, the hourly in that line already is like, if I do like 2 or 3 more things, I'm gonna be like, okay, it's too much on my chart. Okay, so we just took out this high here, right? Have this here, boom. Yeah, from there, have this. See how price plays off of that. But now think about it. If you had a sell model right here and it played off right here, would it be a good sell model? Well, depends on what you're aiming to, because you have this 1 hour consolidation potentially blocking you from going to the upside. From down to the downside. So it can go take out this low. This low is inside of the consolidation, but that'll be 24, 25 points, if that, whatever this makes. So is it worth it? Because if this is your middle candle for the confirmation, this candle already by itself is a 40-point candle. So even half of that is still 20 points. And that low is right there. So I can already tell before it even happens, it's not even worth it yet to take it to this low. Now, that doesn't mean that it can't go lower, but you want your initial take profit where you can initially see yourself getting out. Anytime you take a trade, you want to see somewhere you can initially get out, not somewhere that's long term. Long term should be almost like your home run. Now, a base hit should be somewhere where you can see it going, okay, it can at least go here. It's going to give me my 1 or 2, 1 or 3. Okay, cool. That's my base hit. And then from there, anything past that, you're thinking longer term, then that's going to be where you're going to look for to see take your home run. But it's all based on how the market plays out in your favor. That drop down. There's that low. There's that hourly consolidation. But remember, don't focus on the body on the hourly side of this consolidation. You focus on the hourly. And all you're doing is getting in sync with whatever's going on. You're not looking here like, oh, you're trying to take a trade immediately. You don't want to get on a chart immediately and it's like, I gotta take something right now. No. It's not what we're doing. It's not how you do it. Okay. So pushing. Now, how can you assess what's going on right now? Well, we have this push up that went and swept that high already. So is price really wanting to go back up and break that high? Or was price done up here anyways, and then now price is pushing to the downside? Because remember, that same consolidation we had right here on the 5-minute. Look at that. So I was somebody that used to trade all of that. The consolidation, the push up, the push down, bouncing off an imbalance. That's not consistent. You can do it. But especially somebody that's coming into the market and you're learning it or you're not seasoned with it, you haven't been seeing different types of markets, different types of volume, then you don't want to be taking everything. You want to come to it with a business mindset. You don't want to come to it like, oh, I sold chicken this day in my business, now I'm gonna sell hamburgers. And then I sold hamburgers yesterday, and now I'm gonna sell tacos. And I sold tacos the other day, but now I'm gonna sell lasagna. Like, you're doing all these different things because you're thinking something doesn't work, or you just want to be a jack of all trades. And trading, you don't have to be. You want to have a system, you want to have a model, something that you know that works, and you wait for it to play out. So that's what I'm showing you guys. Like, you want to have a system, you want to have a model, you want to have something that you can come to the market every day and like, okay, if I don't see this or it's set this way, then it's not my opportunity. And then boom. But if you're trying to do every single thing and catch every single thing, then that's how you get lost. Like, it's even seeing something like this, like, man, I could have took that, went to a 1 minute or 15 second or something and caught that and then dropped it down. You could have, but were you forcing it? Is that something you see every single day? Because I'm not looking at consolidation as a trade. Now, could you? Yeah. But if I looked at consolidation as a trade, it's going to be in confluence with my model. So that was just a explanation point. So take that off. Now, if price runs back up into this wick, I can look at that consolidation again, and I can look at the midpoint of that wick, which is 23,081.25, and look see how price comes into the midpoint of that wick, which is already the high of the previous high that was swept, and see how we come into this consolidation now. And we dropped hard into it, tracing right back up, and now we're creating that confirmation. So this will be the inversion. Like I said, all models are not going to play out That's the mindset you definitely want to have. All models are not going to play out because they're on the chart all day. You can find the model all day. It's just which ones are going to work in your favor. That's just like saying like, oh, I only see a couple imbalances a day, maybe on a higher time frame, but as soon as you start dropping lower and lower and lower, you're going to see more, and those are the ones that create the model. So if you want the right trade for yourself, then you got to catch the right opportunity. So now look at this. If this candle closes like that, this consolidation. I'm sorry. This what's not doing? Oh, this entry would be from here all the way. Stop loss has to be here. So that's 40. Let's call it 50 points. You had to target the low. Well, in this case, since this push went down and made a low, the new low, you had to target this low. So price will have to push up and then go back down to this low. We already just swept this low, so now you're already at a disadvantage because we already swept a low. So that's when we want to go for a high, unless it makes a high or engineers a high and then goes for that high, then goes for that low. So you just basically have this close. Price kind of makes candles pushing up, makes a swing high inside of this, and then price goes up, takes out that swing high, and then we drop to the downside, taking up that swing low. Then we continue to the downside. But watch the hour. Look at how the hour is responding to all of this, because this is just more information. But based off of the consolidation that we're using, that is the real corporate right here. And it's the body of that candle closing inside of that consolidation. Got the whole gang in here today. I just seen it. What's up, fellas? What's up, everybody? How's everybody doing in their trading? That's all I want to know. Let me answer this on who having problems and what problems. Because we're sitting here waiting anyway. Let me hold on. Give me 2 seconds. Okay, it should work now. Yeah, but when you're coming to the chart and you're looking for your opportunities, man, don't rush anything. If it ain't getting to you the way you want, it's not your opportunity. I don't care if it dropped 3,000 points right now. You gotta look at it from this perspective, and this is something I had to learn. This isn't going anywhere. It's gonna be here every single day. It closes only for 1 hour for 5 days straight. It opens up on a Sunday, so now you have Sunday afternoon. I don't trade Sundays at all, but I'm just saying from the perspective of it's open. So essentially you have 6 days of this and 1 day off. And if you hang your hat on one trade every single day, then for one, you'll have confidence in yourself. Now you're not trusting the model, trusting the learning that you already did. And you're not giving yourself a chance. Like, the only reason I'm here now because I failed so much. It's not because I learned it and I just went super crazy. No, I failed a lot. Like, a lot. But in my midst of failing, I was actually enjoying the failing. And I didn't even know that because I was enjoying me learning the concept and putting stuff together and then learning market structure and then taking stuff off my chart and then getting better at taking stuff off and realizing I didn't need stuff on my chart. I just need it off. So that's the main thing to it. Oh, what time is it? Okay, cool. Timing, exit, entry has always been a learning opportunity. And FOMO on some models playing out without me on the bus getting rushing. Right. So timing and exit is just based off like how I just described. When you're getting into a trade and you see a trading model, just because you see it, where could it possibly go? Boom. Okay, you ask yourself that. And then if you're asking yourself where could it possibly go, and you're only seeing it, it's only giving you a certain amount of points, it's gonna be like, dang, well, is this even worth it? And then you look at the risk associated with it, which is the initial stop loss. So it's already giving you a preset risk. So you see a preset risk and a preset take profit. And it's like, man, it's only giving me a 1-to-1. And it's not even looking good, especially where it's at. Boom, right then and there, your mind's like asking yourself all these questions. Like, okay, should I take it? Is it based on that? And sometimes you're going to ask yourself so many questions. You're going to trick yourself off getting on the bus. But that's why you want to have that initial thought of like, okay, risk management. That's the first thing you want to think about whenever you see a model. Where is it at? Why is it there? Where is it trying to go? And that's based off top-down analysis, just like how we did today. See how we didn't rush on the chart or rush for a trade, or see this model and it's like, okay, we're taking this model. Because even if this model was to play out and it dropped super crazy, that doesn't mean that we need to take it based off the initial risk. Now, anybody can take it. That's your trade. This is just what I'm advising, because I want you guys to be independent on your thinking when it comes to what trades you want to take. Because me risking 50 points, I'm not doing it. But if you want to risk 50 points to try to catch 100 points, you got to have a reasoning for it. So now in that case, I can say this. Let's say you seen this trade right here, right? You say, Tony, I believe that it can go to this low. I'm like, okay, cool. I can't tell you that that's wrong, because you're probably seeing something based on what you're seeing that shows you that you're looking for the longer or bigger picture. So in this case, from that low to there is 66 points. So now if you go 66 points to the initial high, that's 48 points, 50 points. So you're getting a little bit over a 1-to-1. If that's what you want to target, then that's your trade. But I'm not targeting a 1-to-1. I need a 1-to-2, 1-to-3, preferably a 1-to-3. So it's all based on how you see your trades. You could be somebody that just wants to take the 1-to-1. You're like, Tony, I don't know why, but it's just like I see 1-to-1s a whole lot faster. They happen a lot faster for me. I'm okay with that. Okay, cool. I'm gonna tell you about the risk. And with 1-to-1s, you're going to take a lot of them, and you're going to probably have a lot of losses. But if you're consistent with it and you're taking the right opportunities, then it can play out for you. I do 1-to-3 and 1-to-2 because it allows me to make mistakes and to take bad trades and still be profitable. So that's the theory to that. So it's all about perspective. Okay, I was green Monday through Wednesday, 20 points Monday and Tuesday, small trades, big patience. And then yesterday was my big one, 75 points. And that opening push, consolidation zones with BDRA. Helped me a lot, especially with the patience. That's what's up. That's what's up, man. That's what's up. That's what's up. Yeah, it's just things like that. Like being able to be consistent like that. Like I have students in here that struggle, and they've been with me for a while now. That doesn't mean that they don't know it or they don't have issues with it or problems with it. They're just fighting through them. And that's what I'm here for, to help you fight through those issues, because you're going to have them no matter what anybody tells you. And that's the thing that people have when it comes to learning or learning the concept or anything, is you're thinking like, oh, somebody can tell me something, I can implement it, and then boom. No. This is a mental battle. So you're dealing with self too. So I got fear of missing out. I don't jump in when I need to. I'm getting to the chart late. I'm not consistent with my time. I'm not waiting for the right opportunities. All that stuff plays a big part. So when you're looking at it from that perspective, you want to see like, dang, okay, is what I'm looking for. Is this trade that I was, am I chasing it, or am I waiting for it to come to me? All these things are applied to you. And all I can give you is a model and a way to look at it. But the thing is you guys showing up to the live every single day and just watching how I see it. And then at the same time, coming to the live with a perspective of, okay, I'm not chasing anything, or a mindset of, I'm not chasing anything. I'll wait for it to come to me. If it don't come to me, it's not my trade. So just like Thomas said, how he caught 75 points today. You're not looking for 75 points every day, but those opportunities do come. Now, the thing is when it comes to a 75-point trade, are you looking for 75 points the next day? No. You're looking for your opportunities. Take the opportunity. You take it. You're done with it. That's it. and then you come back the next day and do the same thing. But it can be a way smaller move, and you just build on that. You're compounding. This whole thing is compounding. FOMO turning to tilt. Right, exactly. And one thing that help you be patient is getting off of it. I'm not about to sit on live for 4 hours looking for a trade because we're gonna force something. 2 hours is a good amount of time, and that's because I don't want to go on tilt. Everybody goes on tilt. Tilt is not something that you could just take out your mind and it's gone. Tilt is built off of, losing, having a loss, trying to get it back, not realizing that you're in a loss, and then tilt is so crazy because you don't even know you're dealing with it until it's over. And it's like, bro, like, why did I do this? Why did I do that? Okay, so show me why I did that. Let me see why I did that. And then you look at the chart like, I didn't see this, I didn't see that. Yeah, because you were locked into the profit. You wasn't locked into the trade. So my focus is always on the concept of the trade. That's why I have that way of looking at the chart. Because if I start to have more stuff on the chart and more boxes and more things to look at, that's my tilt. Because I already see a bunch of things. So if I'm starting to see a lot of boxes and lines, like my tilt starts to kick in, like, oh, bouncing off of this, bouncing off of that, bouncing off of that. I know I can mark up the chart and see a lot of stuff. But in this situation, do I need to? No, I want to come to it as a business. I'm coming to it, get my profit, and I'm gone. Simple as that. There's no need to rush it. And everybody deals with that. But people are ashamed to say they deal with tilt or fear of missing out or FOMO. All these things are normal. This is normal things. This is not something that you're probably dealing with. Anything you're dealing with in trading is nothing new at all. I can tell you that for sure. So learning that and knowing that you're not dealing with nothing new is literally just a conversation or something that you could just ask and say like, okay, I'm dealing with this. And it could be a 20-minute conversation that can change everything. Because it's simply asking yourself like, okay, is it me or is it the chart? You could be doing something wrong with the chart. You could be seeing something different. What was that, yesterday? Day before yesterday? Jose, when we had the imbalance and then you missed it because you didn't add the gap to it, that little thing, that's chart. That's technicals. That's you didn't see something the right way, and then when you didn't see it the right way, it threw you off. So that punch, when it came back up into it, when we caught that drop, I think it was a drop or a push up. When we caught that, you missed it because you didn't change that. But that's perfectly fine. That's something technical, but when you're dealing with something that's more mental, then you also have to be aware of that, because if you just ignore it, it's not gonna do nothing for you. This morning I saw the model 2-hour 10-minute. I went to lower time frame and saw it already start playing out on a 3 and 5, so I canceled my limit order. It suddenly shot up and hit my entry, and on the 10-minute it played out. It would have happened. Yep, right there is that. If the 10-minute is where, because think about it, you have to ask yourself: is a 10-minute where you looking for opportunities, or is a 10-minute where you're looking for framework? So for me, I'm looking for a framework on the 15-minute, but I'm looking for trades on the 5. But if a trade pops up on the 15-minute, that's a trade potential, I'll take it because it's based on risk. If the 10-minute is where you look for opportunities, you stay on the 10 minutes. So that means you need to go 10-minute and higher. And then you only go 3 and 5 after you're in the 10-minute. So until your 10-minute trade gets to you and it puts you in there, that's your opportunity right there, and you take it. And then after you hit your buy or sell, you're in a trade, and you feel confident in how it's playing out so far, then you go to a 3 and 5 and just manage it. But for the most part, when it comes to you taking your trade, and that's the 10 minutes what you like, 10 minutes where you take it at. And then use the 10-minute and higher as confluence to see what the 10-minute is saying. Just like that, man. And that's why I say these questions right here are questions you guys always gonna have. And that's why it's important to ask them. You know what I'm saying? Like something so simple. You would think it's a dumb question, and it's probably not. It's probably just a question you need to get figured out. That's what I'm here for, and that's what these lives are for too. Like, we're going to catch trades, but we're also gonna be patient. And I will sit here for 2 hours and not take nothing. like I told you, like my trading time is the morning, but I'm not trading in the morning because I want to wait till I get to the chart. And does that mean that I miss trades in the morning? Yeah, but is it worth it? Yeah, I feel like it would be, because I'm coming to the chart with a fresh mindset, and you gotta get to see that. Now, as we'll see in a minute, as we get towards the like going towards the end of the summer, going to fall, all this is gonna pick up, and it's not gonna run one way. It's gonna run, push up, run, push up, run, push up. Volume's gonna pick up, and then from there, that's where you want to take your opportunity. So there's that push down on the 1 hour. We have 6 minutes left until that 1 hour closes, and then you see that 1 hour is making an inversion. So let's see how price plays out with that. And then you see how we had this big old push down, and see how I was saying, like, if you target this and then the low that I was just creating, and you can also target this low, but you need to know where you want to target. And then you set the trade up or your trap, and then if it doesn't play out, cool. But what happens is this, is you will see it on the 5 minute, it didn't play out, and then you go down to 3 minute, and you look, okay, you go down to a 2 minute, you're like, okay, and you go down, and you're like, wait, dang, see, if I would have went to a 2 minute, and I would have put a confirmation on that, man, I would have had it. I would have took this right here. Is that what you trade? You trade a 2 minute? It's a 5 minute your entry. So why are you going down to make sure it happens? No, if the 5 minutes what you're looking for, the opportunity on, that's what you stay on. You gotta be consistent with whatever you're doing. I'm consistently looking at the same time frames. I love 3 minute. I'm looking at the 5 minute because giving myself a little bit of grace when it comes to being patient. But you'll see, I'll go from either 5 or 3. But for the most part, I'm always breaking down my framework on a 15 minute. So you've seen the reasoning for the drop, or the possibility of the drop, is because, like we talked about just a second ago, we had this consolidation here, which that 5 minute consolidation, I don't know if you guys were in here yet. I didn't see who was in here, but you have that 5 minute consolidation there. Price drop right off of that, and boom, this big old spike to the downside, 100-point drop. Does that mean that that's your trade and you missed it? No, that's a confluence. That was giving a confluence on why price was dropping to the downside. We already took out or swept this high, and then look at what price we're sitting at. I told you guys just yesterday. I said when we seen that big spike go into 23,000, I said we just passed a big figure level, which is 23,000, and now prices hit up to 23,000. And then from there, we're going to see how price plays out when it gets up to that level, because now this is a basically like a new level. And then once it gets up there, does price really want to go up there yet, or is it going to play around first before it continues to the upside? And right now, it's playing around before it continues to the upside. It only went up basically 100 points into 23,000, and then dropped off. And then also a quarter point on our price levels will be 23,125. So that will be here. So pretty much in this area. So prices in this range between 23,125 and 23,000 even. So what do I mean by that for the ones that probably don't know or forgot? Let me do this real fast. Let me see how our chart looks before I do it. Okay, we got time. Let's push it down. We got time. Okay. So I told you guys how I look at price when it comes to levels. You're looking at here, big figure. So that's going to be 23,000 right there. And you have mid figure here, which will be 2350 or 500. I'm sorry. So that would be mid figure. Let's make that black here. And then another one. That'll be 500. So now we have two mid figure levels and a big figure level. Now from this big figure level, you take this and you have these quarter points, these bigger quarter points. So this would be 250. This will be 750 at the bottom. Yeah. Now you take these levels, and then each one of these levels, look at it in quarterly levels. What time frame is it? The big consolidation zone was 5 hour, and the tiny one marked up where it dropped off at was 5 minutes. Okay, so then now you take these smaller levels, and now I go quarter points of these zones. So now this will be 125 a piece. So you have 125. And then this will be 7. It's 875. Yeah, 875. So, boom. These are 125 point levels. So you see how this is 100 points now from here to here. So it doesn't seem like a lot, but it is a lot because just think about it. This push right here is already 125 points, and it's in the middle between these two levels. But as price is pushing up, look where it stayed aside the whole entire time. Went into today, and then this push up off of 875, we pushed up, and that went to the big figure. And then see how we consolidated here. We had consolidation here, but stayed inside this area right here. This is looking at price as well, so we'll keep that on just so you guys don't forget. So put that into a folder. So price. We'll change the color that way it won't be confusing. And then I'll refer to it every now and then. That way you guys can remember to look at it. I want a color that's not in the way. So, and I used to chop it up more than that. I used to chop it up, and so I used to look at it. I look at everything like fractal. So I used to take this same level and chop it up into 4 pieces. What I mean by that. So you have 125 to 23,000, and I used to do this. So 125 to 23,000. I used to do this and look at it in quarter points, like that. I think this is every 32 point something points. 31.25 or something like that. But yeah, and then I would look at it at this perspective as well. But yeah, that's what I say. So many ways you can look at it, at price and how price is pushing. But your focus is time and price. So what is price doing? Where is it at? Because the time in which it's happening is going to give you the volume. So now we can be headed back down to the 875 level. So let's turn that stuff back on. Boom. Let's just have more time right there. Boom. So now that we're getting that push down, all it's doing right now, just confirming this inversion on the ROE. And then now you ask the next question you ask yourself is, where is it trying to go? Keep it simple. So now let's put the hourly on the big screen, because now that we got a big push, a big push is asking for what? More information, more data. Now your eyes want to go straight to obvious stuff. So you see this consolidation right here. Before I mark up this consolidation, I'll ask myself, where did this consolidation come from? Well, I look to the left and I see it came from this right here. So now I'm looking at price officially coming back here. But it does have this in the way. So right now you're just setting up roadblocks. That's all you're doing. Because remember, all this, what's happening right now, just started from these two candles. That extreme push up and that extreme push down. Because this whole push up was still inside of this down close candle right here. And then now prices dropping to the downside. So now let's go. Let's look at that 15 minute. So now that it's doing that, let's monitor on the 15 minute. So yeah, that low taken out. I mean, this high taken out, that low taken out. Now we're creating this new low. Take out this consolidation here. And now we're pushing to the downside. But if you look, so this push up and this push down, this push up was never taken out. So it swept the high to the left, but it never got swept by this high. So we have this high, and this high is coming off of what? This high is essentially coming off of this whole price leg right here. This whole thing. So depending on how price wants to play out, this could be the play out for the rest of the week. Targeting this low here, possibility. Because you want to think also it's coming off of that 23,000 level. Does it want to go back up into it? Or are we coming off of it and it's going to do a big retrace to the downside? Okay. So we probably have to 4 hour. Yeah, that 4 hour 1 hour busy, yep. Yep. Knocking at his door. So like even with this, say how this is an hour and it's 4 hour at the same time, that they're pretty much lined up. I would do this sometimes. I would do, because it came first, I would say 4 hour slash 1 hour. And that's just to give me visualization that there is two higher time frames set at the same imbalance. So just seeing how price bounces off of it, and it's just like, is it made with a little bit of concrete or is it made with a lot of concrete? Well, there's two time frames, higher time frames telling me that we have imbalance here, so it's made out of a lot of concrete, so it's gonna take a lot to break it. And if it does break it, and it goes to that hourly consolidation, what if it's a wick? If it's a wick, then it's like, oh, okay, you don't even want to go there. You just want to go there real fast and then go right back up. So it's about how you look at it. Look at how the candle is telling you what it wants to tell you without closing. You want to get good at reading the candle. So this push down is the same thing how we seen it yesterday, but just imagine the other way up. But instead of two candles, it was one. And then you feel like you just missed out. Like, man, I just missed out. Trade push down and it's already done. We're only 30 minutes into the opening. Look at that rejection. 20-point rejection. So if you're going to reject 20 points and then come right back down to it, what is price trying to tell you? 20 points a lot? 20, 25, 30, 40, 50. If you're going to reject that many points and then come right back down, price trying to tell me something. Well, this is where the patience part comes in at. Because right now you're asking yourself, okay, is price really wanting to go to the downside? Or is price going to get something to go back up? So now we're in this area. Now we're in this area. Let's focus on the 5 minutes. And then now, why am I going to the 5 minute? Because now from here, I can just simply get in sync. And even when it comes to like looking at other imbalances, I'll keep this on. I'll keep this on the hourly. So I would say, let's see, settings, visibility, 5 minute and higher, 15 minute higher. Because whatever I'm looking at on the 5 minute, I want to focus on pure price action. So I maybe want one or two things on my 5 minute, and that's it. Because when I start marking up the 5 minutes, start getting sync with it after it starts to play out, then that's what my focus is. I know where I'm at. I know what it's bouncing off of. That's why I have these two charts to the right, and then from there, I'm just getting in sync with that. It's the flow of that. Look at that rejection off of that inbound. Now what do we have right here? Possible, not yet. So that's be yellow. Thumbs up to conclusion. Chat a different window. That's why you don't. That's why you don't rush it. Because if you have that box blue and the inversion is not made yet, you're mentally telling yourself that you have an inversion already. You don't, and you'll be surprised how that you'll overlook something like that. That's so simple. It's hilarious. Um, so I got this message from so I'm looking now. Got this message from one of my students asking if Top Step is down. I'm like, I don't think so. So he's like, can you check? So I'm looking, and he was like, it froze up, and he missed his trade. Like, you didn't miss a trade because it froze. You missed trade because technical difficulties, and that's gonna happen. But I just went and looked at the. I think they fixed it. But I just want to get to that point of technical difficulties. That's going to happen. Whenever you're having those issues, don't ever blame it on you missed a trade because of this. You probably did. You probably did. Just chalk it up. Go for the next one. Like I say, this market isn't going anywhere. I was just simply waiting. Okay. Now you have an inversion. Why is it not? I'm not going down to a lower time frame. Yeah, right. Comes with the territory. So why am I not going down to a lower time frame? But I went to a 1 minute and seen that there's a model happening right inside of that yellow box. Yeah. What I'm showing you guys is that if you have a time frame to take your trades on, you want to stay on that time frame no matter what. And if it doesn't happen on that time frame, it's not your trade. So let me just give you a quick example. So you see how you have this, right? I go 1 minute. There's your inversion there. Price push up. Here's confirmation. Price went down. Initial stop losses right here. And this was maybe 11-point risk. And now it's pushing up. And from that entry, you're already well, it was up 20 points. So that was 102 right there. But that's not the time frame I'm looking at that trade on. And you gotta have rules for yourself. Otherwise, you'd be just chasing everything. That's me chasing. Now, what I do? I trade the 1 minute. Yeah, I trade the 1 minute. Trade 15 second. I trade 3 minute. Trade 5 minute. But when it comes to looking at opportunities, you want to have your focus on the time frame that you want to take your trades on. For me, 5 minute, 3 minute. But a cheat code is whenever you have a higher time frame like that and you're seeing rejection off of it like that, you can go down to a lower time frame because the imbalance is doing the work. So now, if this closes like that, this would be opportunity here. I can't mark it up yet. Can't mark it up red yet because it's not closed to confirm confirmation. So this will be a confirmation, and then that will be like a 12-point stop loss. Now in this case, what you aim for, because price has no swing high or swing low to aim to, which it's trying to make one right now, because this candle could be the high. Next candle closes below it and it'll push down, and then you can aim for this swing high right here, whatever it makes. So from here now, it's a 1 to 2. Okay, still pushing up. So now look, now you have your confirmation. You have your inversion. You have your initial stop loss. Oh, initial stop loss. There. And there's opportunity. Stay. Right back. Where is... Okay, ain't take off yet. If it wants to take off. Okay, there's a drop. So now you want to look at the midpoint up here. What? Excuse me. And trade like this is what happens. You see this, see opportunity, you take it, trade doesn't play out. Then you're like, man, this and that didn't go right because of this, it didn't go right because of that. This trade risk from top to initial stop loss is 12 points. 12 points. So if you're frustrated because you lost a 12-point trade, you're dealing with a whole lot more. Me, I'm waiting to see how it settles out. And this is why too, like I told you guys, when it comes to taking limit orders and market execution, I would prefer market execution because I can see how the market is executing first before I take my entry. Is it going to reject right off? Is it going to hit, bounce right off? Even this candle can literally close above this initial stop loss, and then that just would be a sweep, and then price go back to the upside. Watching it play out. You want to see how that candle closes. One minute left. And that candle right there, just the way it's moving and going up and down, can make you so frustrated because it's just like, it's supposed to do this, it's supposed to do that. Let price be price. Right. Yep. Mm-hmm. You can look at it exactly like that, Adrian. And it's always, it can do this and still fail. That's this chart being a chart, but you can definitely look at it in that perspective with this, like how we just did that. That's why it's important to see it play out, because those things will help you mentally when it comes to like, okay, let me see based on how the trade is playing out. It's kind of pushing down. It really didn't push up super heavy yet. Okay, it might want to do something before it goes that way. Because we are bouncing off a 4 hour and 1 hour busy. So what you want to see is you want to see good movement up. But when it starts stalling around, it's like, okay, something, it's waiting on something. And remember, we just came off of this drop. That's expansion. So if that's expansion, what could this possibly be? Consolidation. You want it to be a retracement, but it could be consolidation. And then you have to deal with that. This is where price plays around. It's the part that could be irritating. It's just like, what is it doing? What is it waiting on? Why is it not taking off yet? All those things will frustrate you. Once you have a risk and you have a potential take profit where you can see it going, you gotta leave it into trade's hands, and that's okay, because also you have this right here, this ceiling. That's something you want to see this work out and this become invalid. So let's say you got in early, or not even early, because that's part of the ways looking at it, getting it right when it touches, is your stop loss. So let's say you did 12 points, right? And then you see the trade now, and then that same risk is 12 points. But then you see this long wick here. Based off how you see in the trade, what's a good stop loss for you? Because what's a good take profit? So imagine, like in this example, let's say I was aiming. If you're aiming for something tiny or something small, then your stop loss is going to be super small. Like, you try to have it right at the initial stop loss. But let's say you're aiming to go all the way back up here, back to the consolidation. That's 93 points. Then now your stop loss goes to be something like this. Well, 3. Something like that. It's a lot bigger in volume. So it's about what you're aiming for, and then that controls your risk. And then see, that's a 1 to 3. And then you're stopped out there, that's 31 points. So now you have to ask yourself, okay, is this something I want to get back into because I'm confident in it? Then you will have to size down. So let's say if I did 1 mini and I was still confident in this trade, then I would have to do half of that or a quarter of that. So I had to do like 2 micros, 5 micros. So I had to do 5 micros, maybe do 2 micros, because you're cutting your position in half because you want to have smaller risk. But that's if you feel confident in it going up. based off of what you've seen. And it's based off of what the initial risk was in the beginning. Because if you only lost 12 points, then you probably still have cushion to take another trade or opportunity if you believe in this setup. But if you risk 30 points on the first one and it didn't play out, now it's like, oh, that's 30 points already. I'm pretty much done for the day. I risked what I wanted to risk. It didn't play out. Cool. And then you have to walk away, wait for the next day. That's why risk management is so important, because depending on the trade, if you got proper risk management, it allows you second chances. That's why my trades, I try to have not my stop losses not be too big, because I'll, just in case I need a second opportunity. Now, when it's doing this, where it's just stalling out, you want to see it punch up, but bouncing off of that 4 hour and 1 hour, which it already did from basically here about, let's see, let's call it, I'm looking for wick to wick, because based on just measuring this wick, 17 points. So it initially pushed up 17 points, and the bulk of the volume is inside of the body. So that's why I'm measuring the wick to see kind of like that. The initial push up was about 20 points off of that imbalance. This crosshair is driving me crazy. You guys can't see it, but I can see it. It's driving me crazy. There we go. Okay, there we go. I can't see So right now, from entry, price is up 25 points. That's initial stop loss is 12. So that's already 1 or 2 right there. As if you had to add the initial stop loss, depending on where your stop loss was. So 25 points would be here. Right, Adrian. Right. That's what we hoping for. Or let me say not hope, anticipate. Based off what we have. And then if this doesn't work out, it's what it is. Like, you have to, when you're looking at the model and you're looking for your trade, you see the model. We don't have a model because it's just there. It's a reasoning why it's there. And then if it doesn't play out, it doesn't play out. If it does, it does. But that's how you gotta look at every single trade. Don't come to it and just see a model like, oh, there's a model, I can take it. Like, no, you have to have reasoning for that model. Good reasoning. So now we're coming to this swing high here. Then what you would love to see is price also creates a floor here. That's what you want to see it do, because that's confirming that it's continuing to the upside. There's that high. Yes, sir. Yes, sir. Yes, sir. So right now that'll be it's at about 40 points so far off the confirmation. And now what you want to see, remember, don't forget about this. You want to see how price is going to play out here. The reason I don't put a box on it or imbalance, because like I said, I don't want too many things on my chart. So I'll put it so you guys can see it real fast, but I'm going to take it right off. So now price is playing here. So you want to see how price is going to play around inside of here. And then this is the next roadblock. You want to see how price plays out here. And then you got another one right here. There. And another one there. And you just blow through roadblocks. But you're looking at, let's see, twice? Oh, you put it right at the initial stop loss. Wait, so okay, so you got hit twice. Now, think about that. If this is your initial stop loss, wait, I'm trying to see why yours is push down, imbalance, there. Why is your wick? That's weird. That's micros? Let me look. 1 second, guys. Look at this. Micros. Micro. Oh, no, not that. Oh, I did get hit twice. That's weird. Yeah, that's definitely weird. Yeah. Cause it never did that. I don't know why it's doing that now. I never seen that happen with micros and the NQ being different. They're always identical. I would say for that instance, I would start monitoring both. Let's say this. Whenever you're having a trade that you're looking for, always mark it up on NQ1. So a mini chart. But if you're gonna take it on the NQ chart. So like if you have you could have two charts, and then one is your micro, take the trade on, and then the NQ1 exclamation point is to take it off. I mean to mark it up. I'm sorry. Cause I don't know. That's the first time I've seen something like that. Well, not first time, but like that, yeah. Been off by like a point or two, yeah, but that's a whole different candle. It is slightly different volume, but still. Yeah. Okay, we got above that one. And we have this floor. So now this is inverted. Kind of arrow blue. This will be yellow. There you go. Okay, let's do that push up. Excuse me. So you got that wick right into it, and you just push right up off of it. Over here, organizing some stuff really quick. Oh man, beautiful. Just watching it play out. So far, yeah. The 30-point range. Remember, this is all off an hourly candle. This price action here. So price can pretty much stall out until the next hour opens, and then the next hour can be the push up because it already created this civvy, this huge civvy, and then price will run up inside of that civvy. So we got 10 minutes left till that candle closes. So see how it kind of finishes off. remember I was telling you guys yesterday, the last like 15, 20 minutes, I say 15 minutes of the of a higher time frame candle, that's when you get a lot of bulk of the volume. So it's like the last quarter of it. So if you got a 4 hour, it would be 1 hour till close. A 1 hour would be 15 minutes till close. You had 30 minute, it'd be what? Shoot, I don't know. It'd be Jesus Christ. Drawing a blank. 7 minutes. You're just trying to close that gap on the hourly as best as possible. Make it full screen for you guys again. How are we dealing with this one? So this is another culprit. That one will be yellow. Want to see it close above this? Yeah, I'll put the box in there for now. So you can visually see it. Bouncing off of this 5-minute BISI. And two, another thing, want to make sure you guys are aware of is when you're managing your trade. Let's say you got a 5-minute trade, you're managing on a lower time frame. The lower time frame can also trick you into closing your trade early. So, we're gonna go over that. Next week I'm gonna go lower time frame when it comes to trades, opportunities. I just want to focus show you guys this week. Well, the past couple weeks that we've been trading is just having the patience part. And you see this whole big old move, and like, man, I should have caught that. And then you see this one, and then you're up, 40 points or so. And it's like, man, but I wanted to catch the 100-point drop. Well, which one was showing you the opportunity that you could take based off the price action or the way you look at the market? And then that micro and mini thing, contract thing with the different candles, yeah, that's weird. I would definitely look at especially if I'm live, just look at, if you see my chart saying something and then the MNQ saying something different, do what this chart is saying, the mini chart, because that's the higher volume anyway. Right. Right. So exactly. So that candle that's going to print next is going to be headed into that SIBI. So now, if it's headed into that SIBI, the first thing you want to find out is it near any consolidation, and then you want to see it break that consolidation. So at that point, the most recent consolidation of where it's at is right here. So you also want to see it break this too here. Like this, pretty much. There. You want to see how price is going to treat this consolidation. And then after it runs back into it, depending on how fast it runs back into it, because you see the drop right now, this drop is happening off this retracement going to the next hour. So you're looking at that 5-minute BISI. But yeah, once it goes up and it runs into the CB, then you can look at it in quadrants as well. So you look at the midpoint, lower quadrant, upper quadrant. And just as this price is going up into that CB, looking at those quadrants, seeing how those price reacts to those quadrants. Because think about it too. We just took out this high on the 5-minute. Whenever you have a high taken out, price can pretty much go for the low. That's just the rule of thumb. Or we're gonna come, try to take out the low, fail, and then go to the upside. But you have right now, you have this floor, but now we're going into a whole other hour. So is that hour going to continue to the downside? Because if you look at, once this closes, you can also look at the midpoint of this wick and see where this model lies in the midpoint of that wick, if you're still in it. Because based off the initial risk, you could have been long gone out of it. Once they got back above. And what I mean by that is, so the initial run down, boom, price swept that initial stop loss. But then it comes back up, and once it comes back up and it taps that entry again, now you're back here with the entry, and then your stop loss can be right at that initial stop loss. So now as price is pushing up, you're well past 1 to 3. So I can see how that could have been confusing on the micro chart because it tapped it twice. Yeah. But see, okay. I just looked at this. If you're on the, let me go to micro chart so I can. What's the time? 30 seconds. I can do it real fast. Let's see. Go to this micro real fast. Okay, with this micro chart, it tapped it once, and then it tapped it twice, right? But when it tapped it, you're here. This is that's the confirmation. You don't get back into the trade until it goes back above this entry point. So until it taps it and goes back above it, you're not in it. So technically, if you get in this on the first time, as soon as it touches it, you get in, and then you're stopped out. You won't be able to get back in again until this candle, because this candle didn't touch the top part yet, the entry point. This one did. So if this one hit it, you never would have got stopped out in the second one, because you waited for it to go back to your entry. This one didn't. So I didn't. Yeah. Go back to my minis. Okay. New hour candle. We got 15 minutes left for the live. Let's see how this next 15-minute candle plays out. Yeah. Yeah, it happened fast. Yeah. Yeah, whenever you have it stopped out initially, you want that second trade you're getting into, if you feel like that trade is still valuable, then you want to get in at the entry point because your entry point is always the same. It was coming back and I canceled it. Oh, got you. Okay. Yeah, that's your entry point. So if it comes down to an entry point, like if it comes up and it doesn't hit it yet, you can't get in until it hits that entry point again, and that'll be your second chance, depending on the trade or the opportunity that you're seeing. So now we want to see how this next hour is going to play out. Are we going to get the initial volume in the beginning? So like, you know how a candle opens and then as soon as it opens, you get a lot of volume and then it slows down, or then you get no volume and then it picks up at the end. Like candles are always printing the same. They're either printing three ways. They're either opening with a lot of volume and then it slows down. They're either opening slow, volume in the middle, slow at the end, or it's opening slow and then closing fast. Candles are always doing that. So if you get to learn how the candle flow is, then you can almost dictate that before it happens. So it's like, okay, let's say you have an entry or something you're looking for. You're like, okay, when this candle opens, I want to see how aggressive it is. And if it's not aggressive, it's probably telling me something. All those things matter. Oh, yeah, let me see also too. I don't want to have too much stuff on my chart, so I'm gonna take this midpoint off. And then let me keep this on a 5 minute. Okay, so if you look at the hour, you can look at the midpoint of here. That midpoint is 22,931.00. So if I go look at that on a 5 minute, look where it's at. Right at the low of the inversion and confirmation. So that's somewhere price can come back down to, but it'll also be coming to this. But also think about what this is. You can also look at this as a second confirmation. So that initial stop loss will be here. So price may run back down, but you want to see how it runs back down and runs down to this low. Here. If it does run back down. That's trade management. And then this is too where it can throw you off because you're watching the 1 hour, you're seeing the 15 minute, and you're expecting it to just catapult. And you start dealing with this, and it can get frustrating. You see that SIBI and start throwing you off. You see that BISI there that price is bouncing off of. But think about it, just between this SIBI and then this BISI, that is. What is this? Back forth, back forth, back forth. That's that. That's that consolidation. So now, if that's consolidation, then what you're looking for price to do, break out of consolidation, either which way, and then head to the upside or downside, and then from there, that's going to be expansion. So now, from this, you're expecting expansion some way, because now price is consolidating between two levels. And levels, like specific levels, will be, in this case, this will be a SIBI, so I'll focus on the price low, and that price low will be here. So 22,984.75. And so you're between 22,984.75 and 22,956.75. That's where it's consolidating at, between those two levels. I'll leave it on there. You see me, like when I mark up my chart, I fade a lot of things out because it's like I just want to. I don't know. Just like got too many lines on there. It's just like it's too clustered. It's hard to see things and navigate clearly. I want to see something there. Okay, cool. Use that as an influence and keep rocking. Now the question is, you don't know how long it's gonna sit inside of this range. Because the new hour started here, so 5, 10, and then now you have two consolidation candles that's pretty much not going nowhere, and then you just wait to see how that expansion is going to happen. Hopefully it happens this way. Head towards that consolidation, but if not, we're going to drop back into that BISI, well, in AKA confirmation, second confirmation, and see how it plays out. So there's a drop into that confirmation. And let's say you were in this trade already, and let's say you didn't close it out. You've seen 1 and 3, you've seen 1 and 2, you didn't close it at all. That's coming back on you. Now in this case, if my entry is here, I would have my stop loss right at that secondary confirmation initial stop loss. So that circle, I'll have it right there. So I'll only lose a penny of what I was risking. So not necessarily a penny, but a small fraction of what I was risking. So if I was risking 12 points, that's only 3 points, 3 or 4 points. So you take a small loss. But then it's gonna play in mind like, man, I should have close it, I would have had a chance. I didn't wait. Why did? Well, I was waiting too long. I was being greedy. You gotta figure out why you didn't close it. Why you seen it? You seen it 1 to 2, seen it 1 to 3. You still didn't close it. Like why? I want to see it go up higher. I want to see it go all the way up to the hourly imbalance. Okay, that's far fetched. So was that a home run trade or was that a base hit trade? Well, what's a home run? Like, okay, what was your 1 to 3? My 1 to 3 was 30 something points. Okay, what was that target? It was like 90 something points. Okay, that's a home run. So now you're far fetching. And then that price, to give you guys that price is here. The initial stop loss. That consolidation, man, got you crazy sometimes. Remember, you're looking at a 5-minute model, but the base or the origin story lies in a 1 hour because you're bouncing off of a 1 hour and 4 hour imbalance. So there's a lot of room for price to do a lot of things, especially down to that midpoint of that 1 hour wick. Okay, so here comes your break even. That is a break even. That's a break even. Almost. Yeah, pretty much from here to here. This would be our range. There. That'll be that. That'll be that, fellas. But hopefully that was a good stream, man. Hopefully you guys got a lot of information, got a lot of good feedback. We've seen a good model play out. Hopefully you guys were able to catch it and participate. If not, we'll be back at it tomorrow. Don't stress about it or trip about it. We'll be back at it. So I'll see you guys tomorrow, my guys. And good luck for the rest of the day.